and what will be our short-term goals in return and the long-term goals? And obviously, for the return, what will be the tax saving benefits, and what are the schemes we must go for it?
Fair enough. Fair enough.
I would like to also know how to file the taxes because I'm not even aware of that. So
Okay.
I'm looking to understand how do we even go for filing our taxes and returns and everything.
Fair enough. Fair enough. Okay, a couple of people have just joined in. Okay, perfect. So I guess that sums it up for everyone. People want to understand how the tax system works for them, how they can save their taxes, and how they can invest their money to get good returns, because a lot of the people have just started working, or at least like they have either 1 or 2 years of experience, or they are still looking for a job or something on of that sort. Okay. People are saying how to go about saving and investing my money. Fair enough. Fair enough. Perfect. So let's start off. Let me just share my screen with you guys. Give me a second. Visible to everyone? Okay, perfect. So, okay. Now the first thing I want to start off with over here is going to be my introduction. Like, yeah, welcome and everything, but who am I and why and how can I help you? So, see, I started my journey in the CA direction, and now I've left it. I'm not a qualified chartered accountant. I'm a semi-qualified chartered accountant, which means that I am yet to clear my CA finals. But what I've done over the past couple of years is I've had my own business where I was teaching people about the stock markets. I'm also a full-time trader. So I've trained over 10,000 students in that. And I've left that business now. I'm doing a job right now with a startup. And my main goal is that I want to impact lives and I want to help people, because that's who I am. That's what I like doing. And of course, financial kida thoda bahut to hai hi. I'm always going to stick to those lines. So on an individual level, I just want to make sure that people are more financially literate and they can manage their own finances, which is why I have come up with this kind of workshop, so I can help people with that. Fair enough. Now moving forward. Now the first thing I want to start off for the day is going to be the salary structures and the taxation, the whole taxation scenario in India, right? So the first thing let's discuss is there are two systems of taxing in India currently, at least for individuals. Like before I started off with this workshop and everything, a person who's sitting in this workshop had messaged me asking, which option should I choose for? There are two options right now, right? So one is this and one is this. So what's the difference and what are the benefits? So this is the new system that's come up, right? So over here you can see the slab rates. If your income is up to 2,50,000, you don't have to pay anything on that. If it's in the range of 2,50,000 to 5 lakh, right? So on that differential 2,50,000, you pay a 5%. It's self-explanatory that way. Now, this seems fair enough, but the only thing is you do not get any deductions over here, be it your HRA, PF, insurance, no deductions. So in case you are earning a salary of, let's say, 7 LPA, so that would get divided into this slab and you'll have to pay the tax on it accordingly. You do not get any deductions on that. Okay. Whereas we have this old regime where you have just 4 slabs, right? It might seem that the tax rates are a little bit higher over here, but the thing is you get a lot of deductions over here, right? So I would always prefer this option. The only reason why you should go for the new regime is if you have a salary which is somewhere around 5 lakh, then it doesn't really matter which option you're choosing, because the amount of whatever tax is coming for this up to 2,50,000, it's anyway exempt. But over and above 2,50,000 till 5 lakh, even if you are getting taxed, you get a rebate under section 87A, which basically means whatever tax is coming, it will be deducted off against that, right? So you have that option in this old regime as well. But if you have an income throughout the whole year, a total income, not just your salary, a total income of more than 5 lakhs, then we need those deductions to help us reduce our income, because we don't want to pay taxes, right? Done. So over here, the old slab, the old regime is basically that up to 2,50,000, no tax. From 2,50,000 to 5 lakh, you pay 5% of that, quite minimal. But from 5 lakh to 10 lakh, you pay 20%, and above 10 lakh, you have to pay 30%. Now, this is basically, let's say, if you have an income of 7 lakh. I'm just considering the salary over here. Let's say there is person X who has a salary of 7 LPA. And the salary bifurcation is the basic salary is 4 lakh. The HRA, which is the house rent allowance, which is 2 lakhs. And other allowances are, let's say, 1 lakh. So total salary will come up to 7 lakh. Now, in this old regime, you get a standard deduction in your salary of 50,000, right? Everyone gets that. There is nothing, no qualification for this. Everyone gets this. So your net income over here becomes 6,50,000, as you can see over here, right? Now the thing is, if I calculate the tax on this 6,50,000 over here, from 0 to 2.5, it's anyway nil. From 2.5 to 5 lakh, it would be 12,500 according to that slab. And from 5 to 10 lakhs over here, it's only till 7 lakh. It'll come down to 30,000. So the total tax I have to pay is 42,500, plus there'll be a 4% cess on that. Do we want to pay this much tax? Yes, no? No, no. I can only see 2 people responding. Others, I want responses from your end. You can put it in the chat. I don't mind. Okay, fair enough. Now let's consider another scenario, correct? Where let's say there is a person who is earning 10 lakhs per annum. They'll end up paying 1,02,500 only as the tax amount. Do we really want to do that? Of course not, which is why we're sitting over here. Now it's important to understand why the salary structure can help us over here. Now see, the 50,000 deduction, you're going to get that, but that reduces your amount marginally. It's still at 9,50,000. If you go as per the tax slabs, you'll end up paying 30% on that remainder amount, which is why it's coming down to 90,000. Now, how the deductions help us is, for example, I'll take the case of HRA. Now, what happens is HRA, you can claim it as a deduction in your income. So income tax allows that. Now, it is possible when, let's say, if your HRA over here is 2,50,000, right? Now, the actual rent that you pay, if that is somewhere, between 2,50,000 plus a 10% of your basic salary, which would be 50,000 over here. So if your annual rent is somewhere up to 3 lakh, then you can claim this 2,50,000 as a deduction from your total income. So from 9,50,000, I deduct 2,50,000. How much is my net income now? It would become 7 lakh. So I would only be liable to pay tax on that 7 LPA and not the 10 lakh or the 9.5 LPA. Okay, so that's how that would go. Is this clear for everyone, or was it a little bit tricky? I'll wait for a response. Clear? Clear? Okay, perfect. Done. Now let's move on to the next. What are the other salary structures? HRA, I've already told you, it is rent, is you can avail it as a deduction, but there is also leave travel allowance, which basically a lot of people. Now, why I've considered only these 3 is because the form that you guys filled, most of you get covered in these 3, right? So for LTA, it basically would include the cost of your traveling by air, rail, road. Now the thing is, you can claim this deduction twice in a block of 4 years. And according to the income tax, a new block has just started in this particular year. So if you are getting LTA and if you are availing it, then this would be the right time to, deduct it from your income for the tax purposes. And you can do it twice in 4 years. Fair enough. Now conveyance, a lot of people get conveyance allowance as well, but you can use it as a deduction only if it is coming on the basis of a reimbursement. For example, most of us are from Mumbai, so I'll take the example of local trains. A lot of us take out passes, right? First class, second class, whatever it is, monthly, quarterly passes. We have to, showcase that slip to our office and get the reimbursement. If that is the structure that is being followed, then the conveyance allowance that you're getting, you can deduct that from your total income as well. Right? So these three allowances are the major ones. And if everything falls into place, you can deduct your income at least by that much amount. So you end up paying tax on that lower amount. Fair enough? Clear to everyone? Anyone has any doubts so far? Yes, no, yes, no. No doubts, no doubts. Perfect. Okay, perfect. So that's what, yeah,
I have
Isha,
one doubt.
tell me.
So is there a limit on the LTA, or is it like basis your income or something, or is it like depending?
So
I mean,
it depends on
really-
your salary structure. The companies will generally not give you a higher allowance, be it HRA, LT or conveyance, because they also want to pay taxes, right? So the higher expense that is for them, the less tax that they have to pay, which is why you'll always see that the basic is always much, much higher than all of the other allowances. That is because they can claim a deduction on that as an expense against their business income. So if you see that the salary structure, if you do not have HRA, LTA, you need to go talk to your HR and sort that structure out for yourself. They are never going to do it. So you can negotiate with them on that as well. You can change your salary structure. This is what we call tax planning, what a lot of individuals do. Fair enough? Done. Moving on to the next one. Now see, how to file the tax returns is something I'll cover at the end. Now I want to move on to something which is known as the 50-30-20 rule. It's very simple. You won't even need to explain it. Just have a look at the slide. It's self-explanatory. If my income is 100, 50 of it I'm going to spend on my necessities, and I should. 30%, let's say your luxuries, your desires, you want to go out, you want to travel, you want to eat, whatever it is. And at least 20% should be into savings. Now, how many of you already do that? How many of you already save money? Like, you don't need to tell me. I've seen the numbers already through the form that you guys have filled. If I show the numbers, you will be surprised to see how many people are not saving any money at all. 60% of the people who have filled the form, there were 70 people who had filled the form. 60% of them invest 0 to 10% on an annual basis. That's not enough, guys. That's not enough. I know it's difficult to manage your expenses, but we need to save that. Now, the problem is, if the money is sitting in our bank account, we use it. So we need to invest it somewhere. So for us, savings is equal to investment. If we keep it in the bank, we are going to use it, right? So let's move on to understand what are the different modes of investment. Now, see, I've put down roughly 7, modes of investment for you guys. Life insurance, mediclaims, mutual funds, stocks, PFs and public provident funds, FDs and crypto, because there are some people who are very much into crypto these days. What is the safest option? Life insurance, mutual funds. Two of the safest options that we have over here. If you want to invest in stocks, you can do that as well, but for a long-term purpose. If you want to make quick money from the markets, forget that. It's not everyone's cup of tea. You can do it, but you need to invest a lot of time into it. Fair enough? Now, I'd like to speak a little bit on all of these things as well. Which one would you like me to take initially? Any particular preference that you guys have? No. ठीक है, fair enough. Mutual funds. ठीक है. Mutual funds. 1 and 2. ठीक है. Most people are saying life insurance, mutual funds, and mediclaims. ठीक है, done. So give me a second. Harsh is saying crypto. Okay, we'll do that as well. So see, in life insurance, there are basically 3 categories. One is known as a term plan. In term plan, it's basically, let's say I take a term plan till the age of 60, right? Now it's basically a bet on the fact that if I am going to die by the age of 60, in case you die before the age of 60, that whole chunk of money goes to the nominee. And in case you don't die by that time, the money is gone. Doesn't sound like a good option, right? Anyone wants to say something? People seem very confused. What kind of a plan is this? So this feedback was given to the insurance companies. Now they've come up with options where you have a maturity period. In case you don't die by that period, you'll still get that money. So there are some changes that have come up in the term plans as well. So you can, Hitendra is saying I'm out of this term plan. No, see, it's not just till the age of 60. You can choose till what day, what particular age you want, 85. Your premium would basically depend on that. Now, the quicker you take a term plan, your premiums will be less. Now, the benefit of taking a term plan is now companies have come up with such a plan where even in a term plan, let's say I take it till the age of 60 only. If I die, the whole chunk of money goes to a nominee. In case I don't die, after that, after I hit the 60 mark, I'll start getting some money per year. So that chunk of money will come down to me in an annuity form. I'll keep getting some money every year. Does this sound like a better plan? Right? Done. Now, even if you did not like this first plan, there is a second one, which is known as a savings plan. Over here, it's basically the same. If I die by the age of 60, the whole chunk of money goes to my nominee. In case I don't die, there is a maturity period and there is a sum assured. For example, if I'm investing, let's say 10,000 every year for 12 years, that is 1,20,000 plus some bonus on that, because the insurance companies are obviously investing that money somewhere, right? So that amount is going to increase, and that whole chunk of amount you'll get on your maturity. So at 60, if you die, it goes to your nominee. If you don't die, you get it. This sounds like a much better plan. Done. Now there is also this plan called ULIP, Unit Linked Insurance Plan. Now ULIP is basically like mutual funds, but with a death cover. So whatever, it's basically a life insurance only. You put your money in, but they are going to invest it into the markets, right? So you will get good returns according to the markets. Plus, there is a lock-in period over here of 5 years, right? Now, whenever you put in this lock-in period, it means you cannot remove that money for that 5 periods. And whatever chunk of money you put into this ULIP plan every year, you can take it as a deduction from your total income. For example, I am investing, let's say 1 lakh rupee per year into this life insurance plan. And my total income is coming 7 lakh. So 7 minus 1 lakh. So my net taxable income would become 6 lakh only. So this is the benefit. And the whole chunk of money that you or the nominee gets on the maturity or the death, that would also be tax-free. So you don't end up paying any tax on it at any point of time, which is why life insurance is important. Now, for us at this point, it might seem like, why should I shell out this 5,000 into a life insurance when I can put it into a mutual fund, which is much more liquid? I can remove my money at any point, right? Just a second, someone has said something. If I want a 1 crore policy, which plan would be the cheapest, assuming I have better returns elsewhere? That depends on a lot of factors, your age, your income, if you are a smoker or a non-smoker, many things come into the picture. So your premium would depend accordingly. So we would have to check that. Now, whatever I'm going to talk over here, I'm not going to take it on an individual basis. If you have any queries, definitely I will address them after the workshop. Fair enough? Done. So yeah, the benefit over here is that the limit of the deduction, I'll come to that. That is something I'll cover at the end. So there is a section called ATC, right? I'll talk about it at the end. Fair enough? So life insurance, clear for everyone? Yes, perfect. Let's move on to mutual funds. In mutual funds, you have two things, ELSS and non-ELSS. Can anyone tell me what ELSS means? Anyone? No one knows. There must be someone who knows. Equity linked. What about the SS? Lock in for 3 years. Yes, so it's equity linked savings scheme, right? So in mutual funds, you have two ways of investing. One is SIP and one is a lump sum method. SIP is where you invest, let's say, a particular amount in every installment. That installment could be monthly, quarterly, semi-annually, annually, it depends on you. Or you could just take a big chunk of money and put it all together into the market at one point, right? So that's how you could do it. Now, why do we have this ELSS and non-ELSS? What basically does this mean? In ELSS, there is a lock-in period of 3 years. So once I put my money into this, I basically cannot withdraw it for 3 years. It's not like you cannot. If you do, there'll be a penalty and you'll have to pay tax on it. But if you want to save your taxes, you have to keep your money over there for 3 years. Now, for example, if I invest, let's say 50,000 in one financial year, I can take that 50,000 as a deduction from my income. If I have a 7 lakh income, and if I put in 1 lakh in insurance, 50,000 in mutual funds, how much does my net taxable income become now? Is 7 lakh minus 1 lakh minus 50,000. So that would be my net taxable income, right? Now, why is this beneficial? In the example we saw of 10 lakh salary, that person ended up paying 1 lakh 2,000 something as a tax plus the 4% cess. So that money is going to the government. So you are anyway losing some money every year. So would you rather want to give it to the government or put it into an investment which you can take a benefit of at least after a while? Right? Which is why all of this is very important. So mutual funds clear for people, or do people have doubts? At least the ELSS part. Non-ELSS I have not covered yet. Clear till ELSS? Done. Now non-ELSS. So in non-ELSS also, so over here you can put in your money and you can remove it at any point of time. But if you remove it in the first year, then there will be an exit load of 1%. So for example, if I've invested 50,000 and right now the value is 60,000, if I'm removing it within 1 year, so 60% ka 60,000 ka 1%, I would have to pay as an exit load. The remaining amount, of course, I will get it in my account. Fair enough. Now, in case, let's say I've taken an SIP, let's say a monthly plan, and let's say I start off in April. So April, let's say I put in 5,000. Every month I'm putting 5,000. April, May, June, July. Now, when does this 1 year period end? It should ideally end in the next April, right? After that, I should be able to withdraw my money. Correct? But the 1 year, it's become 1 year only for that 5,000. For the remaining amounts that I've paid in other months, it's only 11 months, 10 months, 9 months. Correct? So it would ideally become 2 years. Because the last installment that you're paying in the month of March, the 1 year from that March would get done in the next March. Everyone got confused, right? Okay, let me do one thing. Let me just stop sharing my screen. Give me a second. Yeah, visible. Is it visible for everyone? Okay. April I put in 5,000. Let's say April 21. The 1 year gets completed, right? Now 1 year from April 21 ends when? In March 22. Correct? So at this point, I can withdraw 5,000 without any exit load. But for this 5,000, when does the 1 year end? In April 22. So you basically have to wait for 2 years for the whole amount so that you can withdraw without any exit load. Now is it clear for everyone? Can I get a yes, no? Can I get a yes, no? People, are you listening? Can I get a yes or no? Okay, now people are responding. Now people are responding. Yes. Just give me a minute. I'll share my screen once again. Screen visible again? Perfect. Yes. Does someone have a doubt? Okay, someone has unmuted themselves. Okay, yeah, done. So that's how the ELSS and the non-ELSS goes. Now the next thing I want to cover is mediclaims. I've not made a slide on that, but yes, I'll just cover it roughly. Does anyone know what mediclaim means? Anyone? If you do know, you can just turn your mic on and speak about it. No one? Take it, fair enough. So see, okay, someone has just messaged health insurance. Yes. So see, life insurance is basically for your life, which is basically life and death. But so you're betting on your life over there. Now you can also bet on certain illnesses, right? So for example, a lot of people have mediclaim, a lot of people don't. Now, if you don't have a mediclaim, it comes off as a big emergency amount that you have to pay, right? Let's say you get hospitalized for XYZ reasons. Hopefully not, but in case you do, you'll end up paying like a big chunk of amount over there. Now, in case you have a mediclaim, what you do is every month or every quarter or every year, you pay a premium, right? And in case there is a medical emergency, the company takes care of it. Now, of course, when you take a mediclaim, let's say a premium is 5,000, so there'll be an amount, there'll be a cap, let's say of 1 lakh. So the expenses up to 1 lakh will be taken care by the mediclaim company. So it depends on your premium, your age, any previous illnesses. If you're a smoker or a non-smoker, all of these things again come into the picture, right? So if you're a non-smoker, no other illnesses, no history of any other illnesses in the family as well. If you're young as well, then the premium would be very low. But if you are, let's say 40, if you have an heart disease and you are a smoker, the premium would skyrocket. And there would be a chance that the companies won't even give you a medical insurance because it's a big risk for them. If you're doing so many things, if you already have a heart disease, there is a high chance that at some point it's going to come up. It's like an 80% probability it will happen. So in that case, the company may not even offer a mediclaim, right? Now, what is the benefit of taking a mediclaim? Of course, it's going to take care of the emergency funds, but again, you get a deduction of it for your income for the tax purposes. Correct? Now, how much and what? Again, as I said, I'll cover it at the end. Fair enough? Done. So mutual funds and mediclaims clear for everyone? Perfect. Now for mutual fund, I have another slide. So I'm not sure how many people have heard of this, but you can divide mutual funds into a lot of segments. Majorly, there are three: small cap, mid cap, and large cap. Right? Now, what does this mean? Cap is basically capitalization, market capitalization. Now, large cap is basically funds. Large cap mutual funds will, majorly invest into the top 100 companies. Mid caps will invest into companies which range between 100 to 250, and small cap would be below that. Now, large cap you also call as blue chips. Small cap you also call as penny stocks. Now, penny stocks would be something which has, probably a price range of 2 digits. These are not huge stocks, but there are a lot of examples you can see which have come up in the COVID. The price is probably at 10 rupees or 20 rupees since many years. And suddenly you see the price shooting up till 800. Massive returns. From 28 goes up to 800. Massive returns, but there are very less chances this is going to happen. Out of 100, probably 5 companies would do that. So in small cap, your risk is high. The returns also would be high, but the probability will be low. Whereas if you see a mid cap company, it will be, the risk is moderate. You won't see a lot of fluctuations over there, but there is also a good, chance of getting a good return out of it. And when I talk of large cap, it's companies like Reliance. Do you see a lot of fluctuation in Reliance price? Probably not. It'll probably always be above that 2000 range. It might reach to 3000, but it's not going to come to 999 or 800 rupees. Right? So it's fairly a safer option. Low risk, but the returns also will not be extravagant over there. You might get decent returns. So and most people, when I saw the form, I had put in a question for your risk appetite as well. 70% of the people have said they want moderate risk. There were 10% people who said they want risk-free investments as well. There were a few people who said high risk. So see, it depends on your personal appetite, but if moderate is what you're looking for, mid cap would be the best option for you. And I would say, if whenever you invest in a mutual fund, let's say you want to invest 6,000 per month into a mutual fund, don't put all of that 6,000 into one mutual fund. There are various mutual funds, and every mutual fund is going to perform differently because they have different portfolio managers. So I would say divide that amount. Let's say the 6,000, I would divide into 2,000, 2,000, 2,000, and put that money into 3 different funds. Okay, so that way I'm diversifying my portfolio. I'm increasing the chances of getting good returns, because if I put all of my money in one fund, what are the chances it will do really well? 50-50, I don't know. But if I put it into 3 stocks, like the 3 mutual funds, at least one of them will do good, right? So that way diversification is going to help you. Now, when I talk of mutual funds, there is also something called as a flexi cap, which is basically going to invest on its will. It could invest in small, mid, or large caps. So for that, the company really matters, and the previous returns really matter, how they've been managing the funds over there. Now, the very important thing is ETF, which is exchange traded funds. Now, there are a lot of people who like to invest in gold. Whenever they have any savings, they put their money into gold. Gold, is it really liquid? At some level, it is liquid, yes, but not a lot. Correct? So you can also invest in exchange traded funds. So exchange traded funds could be, about particular, it could be about gold, it could be about the index. How many of you over here know what exactly is an index? Does anyone know? If yes, could you please elaborate? Isha, yes.
So index is it's like a collection of companies. So you have Nifty 50. So those are 50 companies representing different sectors, and that is how they try to club around together to map how the market is going on.
Correct.
And you can
Fair
also invest in index directly.
Correct. Correct. So now I'm sure you must have gotten a good idea about the index. It's basically a collection of the top 50 companies. That's Nifty. There are also sector-wise index. For example, there'll be a Nifty IT, which is going to take only the top IT companies. So you can invest into particular sectors as well. You can invest into a particular index as well. Now, index on its own, you cannot trade into that. But this exchange traded funds, such mutual funds. So if I put my money into such funds, they are going to invest that money into such instruments, which is going to basically replicate the index, right? So if you are sure that the economy is going, a particular sector is booming. For example, during COVID, pharma sector booming, right? So I could have put my money into the pharma segment ETF and I could have gotten very good returns out of it, right? So you can do the research and you can invest into it accordingly. You have many options over there. Fair enough? Done. Now what's the next thing? Now this is something I've kept over here, net worth. Do you guys know what net worth is? Like, it's very simple. It's assets minus liabilities. But what do you mean by assets? What do you mean by liabilities? Any idea? Liabilities would be, example, a loan. A loan is a liability. You have to pay it off. Something that you owe to someone. Asset is something that you own. Maybe a house, maybe a car. But if you ask me a car, for me, I would never consider a car as an asset. For me, an asset would be something that is going to make money for me. So if I consider, let's say, a mutual fund, I would say, yeah, that's an asset. It's going to grow. But a car, I need to put a lot of expenses and maintain it. For me, a car is never going to be an asset. How many of you guys know your net worth at this current point? Does any single person over here know what their net worth is? So Meet knows. So one person, we have one person. So if you ever, Isha also knows. Great. So if you ever want to calculate your net worth, just you need to consider a couple of things only. First of all, your bank balance. If you have any FDs, consider that. If you have any investments in mutual funds, insurance, something like that, consider that as well. For liabilities, just deduct any loans or anything that you have on your head right now, credit card bills, education loan, home loan, whatever it is. Deduct that amount, you will know what your net worth is. We hear that Elon Musk has, this much money. That's their net worth. They have that much money. And just imagine that gap that you have with that person and you. I don't want to put you guys down, but I know we all have really big goals. But if we want to reach there, we're going to need a lot of planning. It's simply like, if I want to go from Mumbai to Goa on a road trip, can I go over there without any planning? No. We all want to go to Goa. We cancel the plan a lot of times. But if we actually want to go, it takes a lot of planning. Similarly, if you want to increase your net worth, it's going to take a lot of planning. Fair enough? Okay, done. Okay, fair enough. Now, see, the PPT was only till this point. Other than this, there's nothing more in the PPT, but I do have a lot of things to say. So let me just stop sharing my screen and just give me 1 minute. I'm just going to pause my video and audio. Give me a minute. Yes, so you can see I shared my screen with you guys again. This is the kind of rough work I was doing for this workshop. So I'll just directly share that with you guys and tell you what are the things we need to focus upon for our tax saving and for the planning purpose. Now see, I told you something called 80C, right? So it's a section in the Income Tax Act, which basically says that you can get a lot of deductions, which includes your life insurance, ELSS mutual funds, PF, ULIP, FD, home loans, all of that included. It can come up to a maximum of 1,50,000 only. Right? So let's say if I have an insurance premium that I'm paying per year of 1 lakh. If I've invested in ELSS mutual funds, 50,000. If I also have, let's say FD for a 5-year lock-in period, let's say over there also it's 50,000. How much deduction can I take then? The total amount, it's becoming 2 lakh, but how much deduction can I take? 1,50,000 only, right? So whenever you're doing your tax planning, I would say invest that 1,50,000 per year. If you can, if you have an income more than 7.5 LPA, definitely invest that 1.5 LPA over there, right? Now, over here, life insurance, everything is tax-free over there, but ELSS mutual fund, as I said, there will be a 3-year lock-in period. In case I remove my money between that 3-year period, I would have to pay tax on the amount that I've taken deduction earlier. For example, in this year, let's say I pay 1 lakh into the ELSS mutual fund and I've taken deduction. But after 2 years, if I'm removing that money for whatever reason, so that 1 lakh which I've claimed as a deduction earlier, it means I have not paid tax on that 1 lakh. But now, since I have not met that criteria, I would become liable to pay tax on that 1 lakh once again. Fair enough? Does everyone understand that? Done. So you could basically invest into these mediums: life insurance, ELSS mutual funds, PF, ULIP plan, which was the insurance plan, FD. Now you can invest into FD also if it is for a 5-year lock-in, then you can take a deduction. If the FD duration is 3 years, then it won't be eligible. But yeah, 5 years, then it's eligible. And a most important thing would be your home loan. Mutual fund investment is 1.5 LPA. So your mutual fund, your ATC. So your ATC, as you can see, it includes your life insurance plus your ELSS mutual fund. In case you invest 2 lakh, you can do it. But the deduction you would get, that would only be for 1.5 LPA. Okay, done. Now home loan. So for example, if I've taken a home loan of whatever XYZ amount, if I'm paying the principal, so whenever I'm paying off a loan, there are 2 elements. One is the principal and the other one is the interest. So whatever principal amount I am paying in 1 year, that also comes under ATC. So you can take a deduction of that as well. Fair enough? Because so I had also asked you guys in the form, how many of you guys have a loan, right? So very few said they had loans. Most people don't have loans, and majority of loans that people have, those are education loans. So I'll talk about that as well. But for home loan, those, if anyone over here present does have a home loan, you can take that deduction over here in ATC as well. Okay. Now I will come to 80D, where we will talk about the Mediclaim. Now in Mediclaim, there are 2 things. One, if you are taking a Mediclaim for yourself or for your spouse or your children. I'm sure any one of you does not have children because most people were in our age group. And if you guys do have, of course, if you're paying any premium for them, up to 25,000, you can claim a deduction. Correct? So that's one thing. Now the second thing is if you are paying Mediclaim for your parents or someone who is dependent on you. In that case, if your parents' age is less than 60, you can claim another 25,000 as a deduction under this section. And if your parents are senior citizens, you can claim another 50,000. So for example, if I'm paying, let's say, a total of 1 lakh as my Mediclaim premium, 30,000 for myself and 70,000 for my parents. So how much deduction would I get for myself? Anyone? 25,000. For myself, I can get 25,000 even though I'm paying 30. Correct? Now, if I'm paying 70,000 for my parents, if they are less than 60, then I can get only 25,000 additional as a deduction. But if they are senior citizens, I can get another 50,000. So if they are senior citizens, total deduction that I get under this would be 75,000, even though I am paying total 1 lakh. Clear for everyone? Perfect. Done. Now, for people who had home loans, we spoke about the principal, but what about the interest element of the loan? Right? So there is this. So whenever you file a tax return, there are basically 5 different heads under which you have to classify your incomes. Salary, there is business income, capital gains, other sources, and house property. So this house property that you have over there, it's basically considering the rent you get from house. For example, if I put a house on rent, any income I get, it would come under this section. But let's say I bought one house on loan, and I only have one house. I'm not giving it out on any rent, but I'm paying the loan for that. Correct? So if I'm occupying that house, I can get maximum 2 lakh interest as a deduction under this section over here. Okay. And let's say I have 2 houses. One house I am living, let's say house A, I live in house A, and there is house B which I've taken on loan and I've put it out on rent. In that case, there is no capping of 2 lakh. Whatever the interest over there is, you can get a deduction of that. Fair enough? Now for people who have taken education loans, there is a section called APE, which allows you to take a deduction of your interest element, not the principal, but the interest element, for a total maximum of 8 years. For example, if you have taken a education loan for a duration of, let's say, 10 years. So whatever interest you are paying for the first 8 years, you can take that as a deduction. It's a maximum 8 years. Beyond that, you cannot take any deduction of the interest. Fair enough? And we've already spoken about HRA, LTA, and conveyance. So I'm not going to talk about that again. One more thing is, everyone has a bank account, savings account. Everyone gets some minimal interest on that savings account. Correct? Which would, in a year, I don't know what that amount is going to be, but whatever it is, out of that 10,000, you can get as a deduction against your income. So up to 10,000 interest on savings bank account, it is not taxable. So that also you can claim as a deduction. Done. Now, again, about the modes of investment, we've already covered life insurance. Only one thing I would like to talk about is in ULIP, the income is tax-free, everything is tax-free, but only if the total amount you're putting into it is up to a limit of 2,50,000 per year. So for example, as an individual, I'm investing 1.5 LPA into ULIP. I can get 1.5 LPA as deduction under 80C. If I'm investing 2 lakh in ULIP, I can still get 1,50,000 as deduction under 80C. But if I'm investing 3 LPA into ULIP, then I will not get any deduction. Fair enough? So it has to be a maximum of 2.5 LPA in ULIP. Everything else, there is no particular limit on that. Fair enough? Done. Now the interesting thing about mutual funds is, when you are paying that premium, you are definitely getting a deduction out of your income, like, for that particular year. But there will be a point where you sell that mutual funds off and liquidate your funds from there, right? So whenever you are doing that, at that point, you have to pay a tax on it. So for that, what would happen is, there is something known as a long-term capital gain and a short-term capital gain. Short-term would basically mean within 1 year. Long-term would generally become something more than that. Now, in this case, if we are putting into ELSS, the block-in period is anyway 3 years. So I'm assuming most of us will, follow that. Now, once you withdraw your money from that mutual fund after those 3 years, if that amount is up to 1 lakh, then you will not be taxed on it. But if it is above 1 lakh, then the whole chunk will be taxed at 10%. Now, how I would plan things for this is, let's say I have 5 lakh invested into the mutual funds. I want to liquidate all of it at some point. It's not urgent, but I want to liquidate it. So what I would do is I would, liquidate 1 lakh for 5 years. So that way I do not end up paying any tax on it. Because that 1 lakh is per financial year. So I would remove 1 lakh every year to have that fund and not pay any tax on it. Fair enough? Done. Now see, there is also FDs, which I have not covered because I don't see a lot of people are investing into FDs from the form that was filled. But yeah, the only thing about FDs is it's a very safe place to put your money at. But the thing is, you will get very, very, very minimal returns over there. You might as well just keep it into your savings bank account. Correct? Now the stock markets and crypto markets, there's Forex as well if someone's very much into it. Now stock markets, yes, you can invest into it, of course, but don't do it without your own research. Don't do it blindly. Don't do it because someone else is telling you to put your money into something. It's just something I never do. And the thing is, I've done all of those things and I've learned my lessons. So it's always better that you learn how to do it and do your own research. If you're a beginner who's looking to invest into the stock markets, I would say put your money, but put it into big names. There could be, Reliance. And if you want to put your money into IPOs, you can do that. LIC IPO is coming up, promising companies. So do invest your money in companies you really, really trust. Right? And the thing about crypto, if you don't know anything about crypto, do not put your money over there because crypto is something that is very, very, very volatile. If you want to put your money for a short term, you need to know how the markets are functioning. If you want to put your money into the long term, you need to understand the technology behind that particular crypto. So again, a lot of research will be required. So yeah, for someone had asked me about crypto. If you want to know more about these things, definitely you can get in touch with me. I can guide you with any of the things that we have discussed today. But yeah, this would be my basic, generic advice to everyone. And if you guys are looking for mutual funds, I've just taken snips of these particular top 5 large cap funds. There is Mirai Assets, Asian Blue Chip Fund. If you want, I can share these screenshots on the group as well. You can just have a look. 5 large cap funds, 5 mid cap funds, and 5 small cap funds. Please share the Excel. Sure, I'll share the Excel on the group, not an issue. I'll do that. So yeah, that's it from my end. I am done with everything. Now the floor is open for questions. In case anyone has any. Does anyone have any questions? Yes, no, yes, no. A couple of people have said no. I'm waiting for other people. Anything else you'd like to say to me, share with me, anything? I kept the time slot till 9 here. Yeah, Anjali, go on.
I want to ask, what is the factor of TDS? I mean, I don't understand the difference between income tax and TDS. So is it the same of what you explained?
Yeah,
That
so
5%,
TDS
10%?
Yeah, it's the same thing. So basically the companies that we work with, they have to deduct the tax at source. TDS is tax deducted at source. So what is the source of your income? That company who is paying you, your salary, they are paying you. So that's the source. So they are required by law to deduct money out of your salary and give it to the government. And for that, we have to do this planning, and they might ask, they might have asked you to share your details, your investment declaration for the whole year, where if you declare all of these things, they might not end up, deducting any TDS because you will not be liable for any TDS or any tax at any point, which is why that declaration is very important. And in case they do deduct that TDS, whenever you file your return, at that point, you can claim a refund of that if there is no tax liability for you. But then again, it would get blocked for that 1 year. And we don't want to lose out on that money. Fair enough?
Okay. Yes.
Done.
Thank you.
most welcome. Anyone else? Any other questions? If not, then I am done from my end. Thank you so much for making it. And I hope you guys learned something out of it, if not a lot.
I mean, thanks a lot to you for like removing some time for us. That's like really, really nice and very sweet. Because I don't think anyone does this for free.
True,
So
true.
thanks a lot. Thanks a lot for
Most
sharing your knowledge. Really appreciate it.
happy to help. Great, guys. Yeah, you can get back to your Sundays now. Thank you for taking time. And yeah, all the very best to you guys. Bye-bye. Yeah, Harsh, you would like to say something?
Stop the recording.
Yeah.